Yeah, sorry guys about that. So we got some technical glitch probably here. All right, so sorry about that. That's technical thing that might happen from time to time. Okay, let's proceed with our analysis. All right, so what I want to show you is the behavior of the cyclical pattern for commitment of traders reports, which happens all the time for currency markets, but not only currency markets, but also commodity markets as well. So, and yet we got yet another massive short position for the yen. So sometimes it might take a long time for this signal to develop, but usually whenever that happens, so that might be the potentially, you know, the situation might be on the verge of growth. Why is yen not growing currently? So because carry trade operations are cautious right now, so they are not massively pushing, because everybody is, you know, everybody wants to do what? Everybody wants to bet on the safe havens. Japanese yen is a safe haven. Market is moving to the safe havens. However, so the situation might be on the verge of reversal. Why is that? Because also the interest rate in Japan is substantially lower than the yields of government bonds, of long-term bonds of Japan. So the peak of yields of government bonds were at 3.3, I guess, and now it's less than that. It's 2.9 probably, but this difference is pretty huge. So with the interest rate less than 1%, and with the yield of 3%, so basically that's a huge difference. So this discrepancy would be probably compensate. So all right, so how can we play the situation, potentially play the situation? The market is consolidating right near the 20-day moving average, right at the center, okay. Basically everything which is below the 20-day moving average might be considered as a potential support zone, so we might concentrate on this zone potentially. I don't say that necessarily we can get the perfect timing here, but this situation might shake off in the near future. I think it might shake off. All right, so I would be waiting for potential bullish bar to the upside, so which might be the indication of possibly beginning the rally, Not now, so currently we don't yet have any big bar. So just here is the doji, for example. The market will be closing with the doji. Doesn't make any sense. But what we might want to see here is some big bar, basically. All right, after that, so the rally might be triggering. I don't say that it will be triggered immediately, so we need some news trigger or something like that. But I will be very, very cautiously and patiently monitoring for the appearance of such a situation, because I want to get on board of such potential signal with the decline of the Japanese yen. I think the decline of the yen is possibly the big play for this summer, yeah. So let's take a note. Let's basically observe how exactly the situation will develop. The same is with the euro yen. So euro might be strong potentially with tax changes, with the military budgets of the eurozone. Some similar situation, and basically we got the same situation. Volatility also moves down basically to the previous November's low, and the same situation too. So currently no drivers for this market is visible, but if we see any development to the upside, so the big bar, for example, we might see the development, the continuation of the rally, something like that. At least I expect this action to continue. All right, guys, so sorry for technical interruptions. So I think that no one is in chat here, right? Oh yeah, Nabil is with us. Please explain GBPUSD. Okay, GBPUSD it is. So currently USD is under pressure, as we know. So it's driven down by the weak sentiment, potentially weak sentiment. Market is rather consolidating, so it's not in a rally. And I will draw your attention to the fact that after establishing the peak, That was the peak basically at May 26th. So we got 4 consecutive closes. I think 4, right? 1, 2, 3, 4. One of the day maybe Sunday, I don't know, maybe 5 consecutive closes, doesn't matter actually. So the market is becoming less trendy. So the trendiness of the market diminishes a little bit, meaning that so it needs some trigger to being kicked off this range. I mean, we are no longer in the downs, in the upswing. We are no longer in upswing. So that's not a downswing either. So that's a consolidation or a coil. Coils are notable for the fact that so volatility is narrowing down. So it might be expanding, maybe further. Might be expanding, but it's narrowing down. And currently we are not there yet, so I don't think we have any signs of volatility be ready to expanding, be ready to popping up. So so we are not. I don't think we are in an uptrend. We're in an upswing because it was, you know, it was over with 5 consecutive closes below the high. So this point was actually at the top of the Bollinger, so that was a potential resistance, pretty strong resistance. So to get a trigger, in order to get a trigger, you need to get either some news event, which might be non-farm payrolls, for example, or you might need to trigger the zone below the intermediate term low, like that, for example. You need to trigger the market from this zone. Why is that? Because the market is an auction, so it needs to lower the prices in order to attract buyers, more buyers into the price section. Okay, and basically also you see that the 20-day moving average is below, which is the dynamic support area. That would be very logical to trigger the market to this area and to establish the upside move. Before that, I think that we currently have the problematic price section. So if the market tries to pop up, so still I don't think it would be very sustainable. Something like that, I think, for GBPUSD will be happening in the market. Well, we don't have a crystal ball. We don't know exactly what will happen, but the trading plan, our trading plan might include some buying positions below the previous intermediate term low at 134.14 or 15. So just I will monitor for the reversal patterns here below this low. You might actually take a 4-hour chart and monitor for engulfing candlestick patterns, for example, in this area, or something like that. All right, something like that. By the way, speaking of gold, we've been already going through gold, by the way, and what I've mentioned about gold, that currently we might be in a contraction mode, so volatility is contracting, meaning that it's moving down a little bit. So it might be again the trading range of some kind, and I think that gold still is pretty bullish. So if you ask me about the potential destination where I think gold will go, I think it will try to break to the upside, but not immediately today. So maybe it might happen on, you know, Thursday, Friday, especially non-farm payrolls might trigger the event, but this week might be potentially calm because of the big day that was June 2nd, and the market was actually climbing to the new peak. That was yesterday, basically. Yesterday was a big price action for gold, relatively big day for gold. So if you were participating, good of you, so I congratulate you. But it's a game of patience. That's a game of patience. And after big days, you have the combination of weekdays, combination of days with low volatility, something like that. All right, moving on. So what I want to mention also is Bitcoin. Is BTC. That's pretty interesting to my opinion. Again, volatility is low, but I don't think volatility is the main thing here. So what I want to show you is that let me show you some insights from Glassnode Studio, which is on chain analysis perspective. Okay, and here it is. So let me just go straight to the Glassnode Studio and show you a couple of interesting observations from on-chain analysis. Bitcoin is currently in the what is called Euphoria zone. It's just entered this zone, but the new all-time high is 111K. But currently we are just slightly below the what is called the Euphoria zone. Let me scroll it down. I will show you. It's called the MVRV indicator lines, pricing bands. MVRV is basically the reliable indicator for Bitcoin, which is called the market value versus realized value. So what is showing us right now, it's showing the position of the market between 0.5 sigma and 1 sigma. So basically this is several standard deviations here, and the red line, the upper sigma, which is 119k, is the euphoria zone. So whenever market goes beyond this line, not immediately, but that's a subject of a liquidation, subject of a correction. We are not there yet, so Bitcoin might be theoretically bullish. So at the same time, Bitcoin needs some trigger to move. What else do we have, by the way? So we have some open interest flowing in. For example, Bitcoin options are at the peak, open interest for options are at the peak. Futures open interest is also increasing on the exchanges. What else do we have? Bitcoin exchange volume dominance is increasing too, so meaning that a lot of money is going exactly to Bitcoin. What else do we see currently? Let's scroll it down a little bit, so I will show you that ETF flows are pretty stable. So the fiat money is going to Bitcoin at pretty good pace, so that's called an ETF flow. All right, so I guess that Bitcoin might be bullish. So we might want potentially to try to do what? To try to find a long position. Find a long position in order to anticipate the rally towards 119. Will it happen or not? We don't know. We don't have a crystal ball, unfortunately, right? But anyway, speaking of the market conditions are so that at this point, currently, market participants are not eager to sell yet. So that's not a FOMO point yet. So they don't want to sell yet. So they sit on the sidelines, sit in their positions and say, okay, we got to watch more the price action. We don't want to dump our positions yet because not many market participants are yet in profit. That's exactly what's happening. Also, technically, speaking of the technical situation, so it's closer to the support rather than to resistance. The resistance is the upper band of the Bollinger here. And yeah, that's what it is, basically. So I think that we got all bullish factors summing up or combining in the Bitcoin chart. All right. Again, we need a trigger. There is no trigger yet. So you see it's consolidating. It's consolidating again in a coil, the small coil. The consolidation, it's visible here. And the good question is whether this coil will be broken or not. I think that speaking of the volatile nature of the Bitcoin, it may easily break this coil to the downside and go higher, and maybe later break this coil to the upside. So by the way, that might be the indication of a good setup. Whenever it breaks down, so you might potentially think of a bearish trap because they work pretty well on Bitcoin. Or on the contrary, you may wait until it shows you some bullish day and you can try to re-enter on the second day, something like that. So the same thing, by the way, as with GBPUSD, potentially as with other currency pairs like EURUSD, something like that. So again, we are making conclusions that the market is bullish not because of only technical factors, but also because of on-chain indicators. They're positioned pretty well. Dominance is growing. Dominance of Bitcoin ETF flows are strong. Institutional money is flowing in. So also it's serving as a digital gold, as we know. So the uncertainty still is high with Trump administration imposing tariffs and all. And Bitcoin might be potentially interesting for hedging against those situations. So that's a hedge, potential hedge against those situations. So flow in the market is pretty strong. I mean, the fundamental flow is pretty strong. All right, so we got some requests for EURUSD. All right, let's take a look at EURUSD. EURUSD. Basically, I don't think there is something different from GBPUSD, to be honest. The same situation here, the big day yesterday, so the consolidation after the big day. Currently we're in an upswing, so in comparison to gold, by the way, so EURUSD had started not so long ago, so it was May 29th. So currently we are still in an active uptrend. So I think that in comparison to gold, Euro USD might be potentially a growing vehicle for a couple of days, not just a consolidation, because yesterday's action was not very huge. So if you wanna jump in this situation, well, the best thing that you can do is to build what I call the protective area or the pivot area below the bottom of the Bollinger. But it might be pretty wide, so I don't see any possibility to set a small stop loss here. Because if you take a look at the volatility on the 30-minute chart, the peak of the volatility is 24 pips, something like that. And well, what you can do here is to place a 25 pip stop protective zone here, which might point you to this 1375, something like that. So if you want to enter the long position, so probably the best thing would be to place your stop loss below, something like that, because it can easily retest this area, make a shakeout, and after that it might grow. Or, for example, if you are risky enough, you may use these retracements to build in order to build a position, something like that. For example, here you can make closer stop loss, the tighter stop loss, and you might get an asymmetrical trading opportunity. That's exactly how it works, guys. Just take a look at how it had worked before. Just for example, American session, May 30, the same thing, 25 pips area. It works like that, okay? You see that the volatility zone holds relatively well, so the market tries to push it lower, but then faces the support, and the same thing might be visible here. So there is not a game of a rush, that's a game of patience. So in order to get a really good trade location, you might want to wait until the market tries to shake the buyers down, liquidate them, and then you patiently go to the 5-minute chart and patiently time your entry, just like it was some time ago. How exactly that might work? For example, you come to the market and you see such an action, okay? Here. What do you want to do here? For example, you might capture the engulfing pattern on the 5-minute chart, something like that. That might be your entry point. So just you don't blindly buy, of course. Well, you may do that, but that's pretty risky. So many traders prefer to wait until some kind of confirmation happens. The confirmation happens, you enter the position and you get into the position, and then you get in a trade. Remember that we are in the market when the market is trying to get rid of the American dollar. The sell American narrative is still viable, so it's still in the market. So it's not going away anytime soon. And as the sell American narrative is developing in the markets, we are still in a pretty I think in the long area for Euro USD. So potential long position for Euro USD might be imposed here. So let's well, we are not planning it yet, so we need some kind of a trigger. But let's quickly take a look at what triggers we might have. So for example, in Exness terminal, you can easily get the idea of potential upcoming triggers if you switch to the daily chart. Put here economic calendar, all right. And go into a 1-hour chart, and let's check it out. For example, for American dollar, that's got to be job openings and factory orders. Not huge, not exactly the huge signal, but we got inflation rate here for the Eurozone, right? And unemployment rates already published. Actual is 1.9% versus 2.1% forecasted. That's basically pressures the euro a little bit, but the market will process this information currently. The same is for Italy, by the way. Unemployment rate is 5.9, a little bit lower than anticipated. That's good. And one is for Switzerland, right? Or what is that? I think Switzerland. Let's check it out, by the way. So we got details here. No, it's not Switzerland. AT, which is AT. Country. Strange. Okay, guys, give me your idea in the chat what it is. Okay, because this is Italy, obviously that's Eurozone. All right. All right, let's move on with our analysis. All right, so other than currency pairs, let's watch cross pairs, because sometimes they also carry interesting developments. For example, Euro GBP particularly. Currently, Euro GBP is pretty close to the upper Austria. That's right. Thank you for the comment. That's Austria. Yeah. My bad. So I forgot the initials for Austria. That's right. Thank you for noting. All right. Okay. So Euro versus Great Britain pound, or GDP. So it's close to the upper band of the Bollinger. So you see that it has very cyclical nature. So it's not trending often. It's not trending often. Sometimes it's trending, but whenever it locks in a consolidation, it moves as a range bound action. Something like that. Currently, speaking of the strength of the British pound, so that's a more volatile currency. So if we get this zone tested, we might potentially think of a mean reversion situation for Euro GBP. So at least, well, from historical studies, we know that it might be pretty interesting. So at least Euro now doesn't look very strong in comparison to GBP. And this market entirely looks as a consolidation, right? So because just take a look at what's going on here, exactly the same behavior all over and over again. The same behavior. Sometimes it's trending, but it's trending in less than 20% of situations. And well, that's not, of course, the holy grail, so you cannot use this indicator as a holy grail, but let's filter it out a little bit. Maybe let's place this 50 days in parameter here in the Bollinger. And well, I think that might be too much because sometimes volatility is smaller. Let's put here 35. If we put 35 here, so you can easily see that, all right, so it's a different story. Right now we are close to the middle of the range. That might not be a very long story, but still that might be some small consolidation here, But of course the better trade location would be above, actually 0.85. So that would be a better trade location for the short. So I would say that, yeah, that's possible. So the development of the downtrend is possible, but I don't think it might be necessarily the very good trade. So we just monitor for the continuation here above this zone. All right, let's quickly go through current developments in the FedWatch tool. Let's see whether we have any developments of the interest rate expectations. Usually we start our sessions with that, but I wanted to show you exactly what markets are preparing for. Markets currently are trying to prepare for the one interest rate decline for September. Just September, not July. July is still considered as a interest rate capped at the same level, but September is 57% of probability of interest rate moving down. How interest rate probabilities had changed? So they are diminishing a little bit. So that's basically the weakening factor for the American dollar. You see that this line was as high as 41%. Now it's 27%. So the hawkish scenario, the scenario of interest rate capped at the same level, was higher a week ago. Just a week ago, it was 41%. It was a parity. That was equilibrium. Now equilibrium is breaking a little bit. So currently, that's basically a bullish factor for everything against the American dollar. But you got to be careful because volatility still is pretty slow. So that's not a huge development. So let's observe the development of these numbers. Stock indices. Let's watch stock indices quickly because we've got some improvement of the sentiment for technological stocks, American technological stocks so far, particularly NASDAQ. And yesterday we got another moment of the market testing 20-day moving average. On the one hand, it shows relative weakness of the market because it cannot quickly pull back. Okay, so you see that the tempo is slow, market is really reluctant to the buying activity. It cannot sustain the buying activity, so it needs to test this area over and over again. So we got many times when it's testing, but for Nasdaq basically it's okay, pretty much okay-ish, because it's a volatile instrument. So you see there have been a lot of times for this market for multiple testing of the 20-day moving average, several 2 to 3 days testing, and again. So but timing this market is incredibly difficult. So I guess that the best course of action will be to wait until the market will probably violate the 20-day moving average back again, as we see it here. So it's incredibly difficult to find a good timing. So that's a tricky instrument. So for example, it goes higher, then on American session as a sell-off, the market testing it lower, and after that it might initiate some long position, or give some long position. So I usually do that. So I monitor for possible collapses, for quick developments to the downside, after which I find some local reversal patterns here on Nasdaq, and then I might initiate a long position. So I think it would be the good course of action for market like that. For short positions, pretty risky because it might easily wipe out any positions, but for long positions, whenever it moves down, it may later form a pullback, something like that. So I think that 22,000 area is absolutely possible to achieve, because that's not just the area, it's the upper band of the Bollinger. I think this area between 21,800 and 22,000. So that might be achieved, I think, because of the improving sentiment for technological stocks, but at the same time, volatility is pretty low. So the tempo is pretty low, so you got to be careful about this market. Some traders, they don't like Nasdaq because of its volatility. They prefer S&P 500, for example, but that's the same story. Maybe that's a little bit more, tidy action, something like that, but you can focus on that. So the proportion of technological stocks in S&P's index is relatively smaller. So the amount of financial shares, industrial shares, communication, whatever, so it's bigger in S&P 500. All right. So what else do we have? For example, if you take a German index with D30, so it's holding, of course, substantially, stronger. It looks stronger than Nasdaq, than S&P 500. So maybe you can consider working with this index instead. But it's on the new peak, so I don't like markets that have achieved the new peak, because that's a very good question if the immediate development is possible or not. You see from the historical studies, whenever we got the new peak, well, sometimes in a strong market, yeah, it's bought off immediately, but in many cases it needs some time to redevelop the correction. I think that, for example, for American indices, we might have potentially more interesting situation, because it's still in the rally, it still hasn't achieved any peak yet, unlike the DAX, unlike D30. Situation might be potentially more correctional, I would say. So the big factor is Japanese yen. If Japanese yen will start to diminish, so if finally we will get Japanese yen to diminish, if we will get GBP JPY to grow, that will support indices. They got some relationship, right? Whenever Japanese yen goes down, so that pushes carry trade operations. Everybody starts to take loans in Japanese yen and invest in it in S&P 500, in American dollar, in treasury bonds, in European bonds, wherever else. So basically the potential development of the upswing for Japanese yen, for GBP JPY, for example, if it will happen, not guaranteed, of course, but it will boost indices. So we got this situation, we got these reversal situations. If GBP JPY will go down, so Nasdaq will also, go up. Nasdaq will also go up in this case, because falling yen is a big factor for support of indices. All right, guys, so we got chat here, so please give me your maybe some instrument which you are monitoring. while you are thinking, so let's quickly go through. What do we want to go through? We'll go through natural gas, for example. I think that it might be. By the way, other than natural gas, we also got silver, which is pretty interesting. Not just gold. Everybody trades gold, but nobody trades silver. Let's watch silver. Silver yesterday had a huge day, by the way. And not just a huge day, but also the breakout. The breakout of all possible consolidations. And the market getting to the new peak from April 2025. Not a historical peak yet, but April 2025. So you got the, the silver is pretty tricky market. Oh, sorry about that. So I occasionally switched off my Exness terminal. Let me get it back. All right, I'm back. All right, so speaking of silver, it has been consolidating for the long time in comparison to gold. Gold has been trending, but silver, you see that silver has been consolidating since May 2024, already more than a year, which might be the long trading range. They're usually broken very quickly. They're broken very quickly. Just take a look at how exactly it had happened in the past. The long trading range was 2-year trading range, basically, the big breakout, right? Oh, what's happening? I don't know, sorry about that. What's happening today? My browser is tricking me. All right, so the momentum for silver is not guaranteed, of course, because this market is relatively quiet. And if gold doesn't go, this market is not going either. But sometimes it develops very fast type of action, So you may clearly find so that so small trading ranges are replaced with big trading ranges here. And if you find any, accurate retracement, so that breakout, so you can absolutely try to get on silver. I think it might be even more interesting than gold. So the aggressiveness of this market might be potentially more interesting because it was consolidating for 1 year entirely. So that's a long consolidation. Whenever we have a long consolidation, the more aggressive breakouts we have. And you see that the volatility is bottoming, and now it started to go up yesterday, basically, right? Started to go up yesterday. Well, for those of you who like unconventional instruments, silver might be the potential play. Because everything comes up here. At least you have pretty big probability of being stopped out. But if you're right, if it goes, so the asymmetrical trading opportunity may pop up like crazy. So just like, you may get the several day swing very easy. Well, I don't say easily, so it's pretty noisy, right? It's pretty noisy, but the volatility is pretty high. For example, it has gone through the roof, 26 all the way to 29. So for example, $4. It might go $4 higher, $3-4. For example, 34, 37, 38. So that might be the window of opportunity. Exactly, they're correlated, right? But for example, if I will show you one more picture. So let's go to trading view quickly in order to show you something, some interesting thing. Okay, gold versus silver, that's a spread. So let's build a spread. We don't care about which provider of the quotes do we have, but let's build a spread. Or XAU, XAG, the same thing, all right? Now, as you see, it's heading down. The spread is heading down. So it's not yet below the bottom of the Bollinger. It's not yet here. So it might have some acceleration to the downside. might have some acceleration, meaning that silver now is gaining momentum. So we are in the situation of silver gaining momentum. Maybe not for long, maybe then gold will outpace that, but silver is gaining momentum. Okay, so with the yesterday's action, right? So yesterday's action was incredibly momentful. So I mean the impulse was very strong, substantially stronger than for gold. And it's moving down, it's heading down. So we are not there yet. We are not in the oversold area yet for this spread. It should test the bottom of the Bollinger at least. So if gold will go down, of course silver will also go down, but maybe with lesser pace. But if both gold and silver will go up, the potential for silver might be slightly higher. That might be slightly more interesting, because inside of the day it forms very tidy trading range. It's very small, and you might actually make the better timing. I mean, the better asymmetrical trade, the better outcome for your risk. That's what I'm saying. All right, guys, so thank you. I guess we are coming to the end of our streaming session today. Thank you for joining. Thank you for listening. Come next Tuesday, as usual, same time, same place. Give us a like, don't forget. Invite your friends next time. And we will be happy to see you on the next streaming session. I was Stan, trading specialist at Exness and a trader. Next Tuesday, we will make conclusions of what has worked, what hasn't worked so far. So let's, keep in touch. Let's monitor these situations for continuation. All right, with that, I'm saying goodbye. Thank you very much for joining, for coming.